Now starting. All attendees are in listen-only mode.
Good morning, everybody. Todd here. Welcome to the Wednesday webinar. It is now Wednesday, the 14th. Almost St. Patrick's Day. Happy St. Patty's Day, everyone. And let's see, just a couple quick announcements, and we'll get rolling. Just some housekeeping items. Of course, I want to do the weekly poll. Just find out how I can best serve you guys in this short 30 minutes we have per week. And this is being recorded. I have been posting them on YouTube as well as the homepage of TradingAnalysis. So a lot of people ask for archives. If you have to cut out early, they should be right down here. Or you can go to my YouTube channel and it will be there. Okay, number one. Number two, let's see. The MotiveWave repository, that's the product where if you're a MotiveWave customer and you want to sync your workspace to mine, if you basically want me to do the Elliott Wave analysis for you on your workspace via the cloud, that is up and running. That can be found in the Trading Analysis marketplace right there. And the other thing is we have a free options and Elliott Wave training course coming up for all members of Trading Analysis starting Sunday night. Okay, so if you want to learn options, kind of a beginner approach, and then we're going to morph in, do some live trading, and then apply them to Elliott Wave. That's going to be a complimentary class that starts Sunday night. Okay, that's that. All right, questions up. Screen. Okay, here we go. Screen number 3. Perfect. Okay, so that's that, guys. How's everyone doing? Good morning. Thanks, Tom. Yeah, coming in. I got that bet going. I was looking good yesterday, and then all of a sudden the market failed right into the S&P at the 786 retracement of the January 26th drop. I was like, oh man, I'm kind of looking forward to getting rid of this thing. All right, so let's roll. Good morning. Good morning. Good morning, Edna, Karsten, Tom, Paul, Scott, Mark. Okay. Mark L, what's up? Okay, guys. Let me just do the quick polls here, and then we'll get rolling here. Polls, number 1. We are going to just 3 questions. Number 1, are you currently a client of TradingAnalysis.com? Yes, no, possibly in the future. I need that magic 61% of the vote in. And we will get rolling. Let's see, is Terry in the house? No, Terry is traveling, and that's totally cool. Sir William, there should be a great name, by the way. There should be a little poll on your screen that'll let you, and Eduardo, should be something on your screen that lets you punch that in. Okay, with just 66% of the vote in. Okay, good. A lot of... Wow, a lot of customers here. A lot of my members. That's awesome. Thank you guys for being here. Yes, no, possibly in the future. Okay, perfect. Closing that one. Question number 2, your approach to Elliott. What's your experience with Elliott Wave, our preferred methodology in the market? I use it often. I know enough to be dangerous. I'd like to learn more. I think it's evil, voodoo, witchcraft. Only 4% of you think it's voodoo. 3% of you think it's voodoo. That number's going down. That's great. 33% use it often. 19% I know enough to be dangerous. 48% I'd like to learn more. That's actually a poorly written question on my part because you could use it often and you'd like to learn more. So it just kind of occurred to me I need to adjust that question. Okay, perfect. One more and then we'll get rolling. Which markets do you prefer to trade? Stocks, stock options, futures, or cryptos? Ava, yeah, I know. Funny that people listen to you in your approach if they think it's voodoo. Yeah, it's only 3%, and there's always some hecklers out there. But I mean, some people might, I don't know, maybe they like my market approach, but they don't like the way I do it. I don't know. I'd love to talk to somebody. Possibly skeptics, yeah. Okay, so we got 55% stock options, 45% stocks, 20% futures, and 8% cryptos. Wow, that's crazy. Okay. All right, perfect. Well, you've come to the right place. 48% of you want to learn Elliott. 56% of you trade stock options. 25% of you in the room are trading analysis members. So, all right, welcome. Let's go. So, all that out of the way. Alan, I did answer that on the butterfly. You can't, I did answer that in the member webinar. You can't, on the position calculator, it's not built for butterflies yet. Okay? But it's just the same thing, Alan. This is a member. I'm just going to, if it's an even butterfly, like a $5 wide butterfly on either side, the total risk on the trade is how much you pay for the butterfly, right? So if it's $250 butterfly, that's your risk in terms of what your tier is. Okay, so let's talk about that in the member area, but yeah. Oh, it's not built for butterflies right now. It's just spreads. So guys, so what's the deal? This is a market that I'm going to tell you right now, I'm not sure exactly what's going on. Yesterday's close was ugly. Yesterday's close, sell-off into the close, originated from the 78% retracement of the January 26 high. I was kind of hoping we get through it so I could shave this thing, but it was kind of a nasty, nasty close. The way I'm looking at this on the S&P is it's a zigzag, and a zigzag is going to trace out a 5-wave move, a 3-wave move, and then a 5-wave move. Okay, so the 5-wave move, so 1, 2, 3, 4, 5, and that's going to be in bigger A. 3-wave move down in B. Okay, A, B, and C, and then the same thing, 5 waves up in C. When you go to the mall and you're like, the you are here sign, I think it's right here. I think we're in wave 4 of C. Okay, so here's 4 of C. That's going to make it a complete 5, 3, 5 zigzag. So we've got 5 waves up, 1, 2, 3, 4, 5, down in B, 1, 2, and you know, this is, I hope I'm wrong. I hope I'm wrong here. If you're not equipped with Elliott, you're not going to know that for this to be a good Elliott correction, we do need one more sell-off followed up by one more push. So the S&P, I think, might have one more push up in a 28.25. And at that point, then we're free to drop in the next zigzag. I'm proposing we're going to do a big 3-wave move, ABC in B, and then I'm proposing a big ABC down in C. Okay. Now, where am I wrong? If we just go straight lower, then okay, fine. I'm going to have to kind of force a little 5-wave move onto this guy and say the zigzag is complete. Is it impossible? No. Is it probable? No. All right. Now, the outlook is we're going to go lower to about 2,600 from either right here or just from slightly higher. So basically, this should be resistance for move down to 26. I'm trying to be very conservative, and I'm trying to give this uptrend as much benefit of the doubt as possible. However, there is a significant top on January 27th that could be looked at as the top. I don't know yet, okay? But for now, if it is down in 1, up in 2, and we're dropping down in 3, not only are we going to get to the 2,600 mark that I showed you in the prior count, but the bounce will be very pathetic, if non-existent, and then we drop. So how will I know which count comes in? It's all about right there. Okay, so either case, and this is why, Elliott, I don't know what the wave count is, but both counts say this should be resistance and this should be our target. For me, that's all I need with our members to make some money. If you can't make money with 150 S&P points, yeah. So this is going to be the objective. And once we get down to here, then I'll make the decision whether it's my blue count or it's my red count. Don't know and don't really care right now. My job is to be short up here and try to make money. We are still positioned on the long side with some of our customers, and some of our positions are on the long side. I am looking to grab the remaining bit of move up. However, the S&P is the weakest index now. Okay, the Nasdaq. Actually, let me start with the rut first. Sorry, let me start with the rut. Let me reset. Let me go to the rut next. All right, so this is the rut on the daily. What you'll notice is while the S&P is below the 786 retracement, which is my key retracement of last resort, the rut broke that, 1575. The rut is through that. The rut has not made a new high, okay? So this still plays in that it could be A, B, C. There's a lot of resistance in the rut from 1609 to 1637. So very interesting up here, very sellable. Old double top here, a lot of resistance right there that we're going to be focusing on. The big question mark for me is the Nasdaq. And we've just moved to a different count with the Nasdaq because unlike the S&P that held the 786 retracement from the January 27th high, the Nasdaq broke. Okay, the Nasdaq broke. And let me just get the retracement up here. Excuse me. So the Nasdaq, sorry. The Nasdaq broke through the 786 retracement, which is at 6830. There's the double top. And now it looks like we're challenging the 1272. And that's a relationship I really like to play. If the 786 retracement breaks, usually you get a move up to the 1272. There's a pretty good, it's a pretty reliable relationship. So the way I'm looking at the NASDAQ is perhaps, and this is a scary pattern, this could be the ending diagonal, which happens in a fifth wave, which is shaped like this. A traditional Elliott wave is this. This is called a motive impulse, which is waves 2 and 4 are removed, and 3 is usually the longest. The diagonal looks like this. It's kind of a consolidating, ascending wedge kind of pattern. Wave 3 is usually the middle length. Wave 4 goes into the area of wave 2. Again, the corrections here are removed in the impulse, but the diagonal, the corrections overlap. And this is where sharp reversals begin. So I'm wondering and very, very anxious to see if, in fact, we are tracing the ending diagonal. And if that's the case, we're going to have to take one more rally up. And then at that point, that is the 1272 extension of the January 26th drop. And if that is correct, all hell's going to break loose from there. Okay, ending diagonals are like unicorns. This is the corny joke I make. They're wonderful and magical to play with if you can catch one, because they can be quite elusive. All right, those are the index. Those are the indexes. Jay, what does that mean? This is what confuses me. Your B does not show three-way movement. What index? Time frame and index. Does this count? Andrew, again, tell me index and time frame. We're asking questions. Just because I get on these little rolls, and then I go back and I'm 4 charts later, and I can't follow the question. So S&P, all right, A to B did not show three-way move down. S&P A. All right, let me take a look. S&P A to B did not show three-wave move down. Again, I don't know what that means. I don't know what that means. S&P did not show three-wave move down in what? In wave 4? On this wave 4? Tell me what you mean. Tom, not unusual for... Yeah, sorry, guys. Okay. Too much. I'm just going to keep going, guys. I love engaging on the comments and the questions, but in this kind of webinar, just this short little free webinar, I'm just going to kind of pile through. All right, so that's that. So in the near term, S&P, I did think about getting long into the close yesterday. We are already pretty long. We've got some positions that I'll take you through. And I didn't want to add more long exposure, being that it's so late in the game. It's kind of like picking up pennies and nickels in front of the steamroller. But this was a nice little wave forward pullback. Good little juicy fib support zone that should give us a ride up. The futures, however, are up by 0.25%. Okay, so S&P futures up 0.23, Nasdaq up 0.26, and the Dow up 0.34. Now, the other index that we didn't talk about, which I don't really follow anymore because it is price weighted, which really doesn't make a lot of sense, is the Dow. And the Dow actually looks weaker than all three. Boeing has come off, Goldman's come off. Those are the big Dow stocks that drive it because of their price. But you can see the Dow wanted no part of the 786, and then the most recent bounce has put in a lower high. Okay, where if we overlay the SPY on this, you're going to see a pretty good divergence. So the Dow made a lower high compared to the rejection of 786, where the S&P made a higher high compared to the approach of the 786. So the Dow, in fact, is the weakest index out there right now. But from a trading point of view, it doesn't. I don't think it really matters. Okay. All right. So that's that. Those are the indexes. Let me just give you a quick spin through the macros, the macro market. TLT, I still think, is setting up into a pretty good little wave 4 sell zone here. And little A versus C equality puts you at 120.7. Let's do a 4v2. Okay, that's going to be right there. And then a 4v3. That's how you build a fib zone for a correction. So TLT, really nice setup on the short side from 119.5 into 121.40. Okay, gold is incredibly range bound. We have long positions on with our subscribers. This is one trade that is not making money for us. We are down money on this trade. I was trying to play the breakout in gold based on this count, and I just think the triangle continues. I was trying to reach the end of the triangle, of the B wave triangle that has been in place since June 2016. So I thought we had enough to call the E wave complete. So as we get off this daily down to the 4-hour, there is the proposed completion of the triangle that's been in play for like 20 months. I was trying to put an impulsive count on this thing, but it's really just not looking like it's very impulsive. When I say impulsive, that just simply means 5-wave move to the upside. It looks like up, down, up. It looks very much like a 3. So I think this trade is going to have to be a loser. Gold comes off. Part of the reason I don't think we have clarity on the dollar yet. I am looking for another drop down in the dollar. I don't think it's time to be long dollar yet, though it's something I'm very, very interested in doing. Triangle 4 could be complete here, or it could be a triangle. Doesn't matter. It's still going to drop down into the 89 to 87 region, which puts the euro. Where is the euro? I don't even track the euro anymore. 125 area, 125, 126 until the euro comes into the sell zone based on that count. So that's just a quick macro look. Let's just look at the crude market. Likely into a triangle there. A lot of consolidation. I was trying to put the triangle count, or trying to put the end of the B wave right here in crude. I still think we go lower. However, I'm going to need to change that, and I can do this live because it looks like we went into a triangle. It still has the same implications. So that's going to be A, B, C, D, E, and then we still drop down. So while crude's below 62.5, we still should be able to move on down there. Okay. All right. That's a pretty good macro look there. Pretty good macro look there. I love all the questions, guys. I do. Don't think that. I mean, I probably have 75 unanswered questions right here. So please don't think I'm ignoring you. This webinar could go on for 3 hours if I ain't going through all the questions. I hope you understand. Okay, so that's that. A couple of positions. We're going to talk about cryptos as well here. We were just talking about crude, so let me show you XOM. We have an XOM position that we've had on for some time, and this guy is kind of just going sideways. Crude oil looks to be a little bit confused, and it's weird. XOM, Exxon, is in this position where it really has the potential to break down in a sharp wave 3. If that's the case, you take a fib projection of this swing compared to this swing, minimum 100%, measured move, two-step pattern, AB equals CD, symmetry, whatever you want to call it, is 64.6. Exxon is amazing how weak it is compared to the broader markets, as are the energies. If this thing starts to get legs, I'm going to be all over this on the short side, Exxon and other energies. We have this butterfly going on right now with customers we've had on for a while, and it's really not going anywhere, which is great because we're making money on it. So we have this 6 April, 71, 75, 81 put fly, up a little bit of money, and we want to stick around the 75 mark for as long as possible. But it's weird because I feel like I'm just kind of balancing on the edge of this cliff right around the 75 mark. So the first sign of stock market weakness, I'm going to exit that fly and go short, like you read about in ExxonMobil. Technology continues to do well. Apple looks to be in a pretty good move up here. We've been finally broken through the 80 mark. I think I'm tracking this guy. Yep, right here. We are coming up on a massive wave 5 resistance zone in Apple. I think 186 gets Apple to the $1 trillion mark. I believe it's $186. I think there is a lot of open interest at the 185 mark, and I think that's going to be the reason. So again, resistance into the 185.70 and not again until 197. I don't think we're going to see that high. Let's just take a look at the option chain here. These are the monthly March. So the 186 has 30,000 on the open interest on the call side, which is much bigger than the 182 half at 20,000. The 180s do have 34,000, so there's actually a bit more open interest there. But that 185 is going to be massive because I'm pretty sure there's going to be just a psychological crazy stat of a $1 trillion market cap. But where we are in that Apple counters, I do think we are coming up into a ending pattern here around that 185, possibly into the 190. So Apple, we've got to really keep an eye on. Amazon is the other one that's on the race for the $1 trillion mark. I don't know offhand what price gets Amazon to $1 trillion. If anybody knows, let me throw it in there for me. Amazon is also coming up in the end of a completed 5-wave move. It's going to be difficult to pick the end of this move, but should be somewhere up into here, 16, 17, maybe even 18, but that's going to be the end of Amazon. A couple other trades that we have on. We do have Intel working. I've got a diagonal. No, I've got a fly going on. Intel looks to have broken out from a really nice reverse symmetrical triangle, A, B, C, D, E, and 4, and just kind of the same theme that we're seeing across many of the guys, kind of a late stage wave 5 rally. We do have resistance into the 58 mark. Trade that we have on in Intel. Oh my God, we already have only 5 minutes left. INTC. I've got this, it's kind of a diagonal front ratio. So I'm long the 52 calls in the 23 March and short double the 54 calls in the 16 March. So those guys are going to be coming up and try to get a little bit more decay on these guys. And then I will buy these back and then sell the 54 calls to get a traditional 52, 54 call spread in the 23 March options. And again, the reason for that is I'm just trying to collect some decay against this wave 5 resistance zone in Intel. Chips have been strong. Those are the guys that are really just keeping the Nasdaq going. And then a couple other ones, obviously like Apple and Microsoft continues to do well. So tech is certainly leading, but there is weakness in other parts of the market. All right, so that's that other. Let me just look at the other positions. We have Lulu, we have Intel, we have Netflix. Netflix is a big loser for us. We did put an Oracle. Netflix came in hard, is starting to stabilize. We're gonna have to cut this thing if we get below 313 in Netflix. Netflix was kind of hit by some news, and it's starting to impact price. So we might have to do a little tap dancing and manage risk there. What else? Oh, Oracle. We put on a earnings fly for Oracle, which comes out March 19th. We finally are breaking through this 53 mark, it looks like. And again, kind of the name of the game in tech is one more push up here in wave 5. And again, where do I get that wave 5? Just a beautiful 5-wave move up into resistance. We have earnings on the 19th. And here's the position that we have on with our subscribers for Oracle. I've got a 54, 56, 58 call fly, just a balance fly, $2 wide against the 56 strike. So if we can get a little bit of a move up into the 54, 55, 56, that's all going to be profit. Of course, with the body of the butterfly, we're looking for the IV crush after earnings, and volatility is pretty escalated in Oracle, so just looking for a little bit of a move up. The expected move in Oracle for earnings is $2.72 on these 23 March. So we're looking for 54, 55, 56, depending on where we go into earnings on the 19th. So that is a trade that we are working with our subs. Let's hit cryptos quick. And again, I hate to not answer a question, but just to get through and get you guys some good content, I've got to pile through here. On our crypto blockchain service, we have changed the count. And in fact, let me show you Ethereum. I need to update my Bitcoin on this workspace. But we went short Ethereum yesterday with our subs. We're looking at 1, 2, 3, 4, 5. We have downside moves around 550 to 500 in Ethereum. We're short at 685, and we have stops at 745 in Ethereum. Okay, so it looks like the crypto space is coming in, and I do have updated wave counts that I need to update here on this workspace for Bitcoin. I think the space is heading lower. Okay, Kraken, JJ. We were short on Kraken, and of course you can be short in the futures market as well. In fact, let me just do that. I put on a short. Remember last week I put on a short in Bitcoin futures with you guys live. I think I made $1,000 or $1,500 just on that, just on a one lot. So why not? All right, I'm short Bitcoin too. Okay, so again, guys, we have, if anyone is wanting to learn about options and how they apply to Elliott, come in and definitely take a trial right here in the orange button. The members area, when you come into the members area, there is the announcement. These are the dates for the course. This is going to be optimizing your options with the Elliott Wave and Fib. Usually this is a $260 course. I am going to do training for all active members of Trading Analysis starting Sunday, March 18th at 8 p.m., content session 1. Then we're going to trade live Monday morning starting at 9 a.m., and then we're going to go for a couple hours and showing you the option strategies that we covered in content session 2. Next week, we're going to meet up. We are going to then move into Elliott Wave and Fib, a nice beginning look at it. And then we're going to do live trading the next day, Monday morning, 9 a.m., do for a couple hours, putting into action what we did the night before. So the course, when it's done, is going to look something like this, optimizing your options with Elliott. This was last year's edition, so we're going to be doing a brand new edition here. So it's going to have a similar look. There's going to be downloads. Everything's going to be recorded. I did a recap on the trades and content. So that's I've sold that for $161 and I've sold that for $397. So we're going to be doing that for free. Okay. So anybody who wants to take advantage of that course, you have to be an active member or trial member at TradingAnalysis.com. So definitely jump in there, guys, and learn how we approach options within the context of Elliott. Okay, let me drop the link in there for you. There you go. All right. So yes, will they be taped again, John? What I was just showing you is what the archives will look like. This was last year's course of optimizing your options, and I put the whole production value in.
So
here.
we made some money on there after our hard work.
So
So it's pretty awesome. So I just want to do this follow-up video.
go crazy with the production in the studio. I use the same equipment that I taped CNBC for in these classes. So I think a very high production value. Okay. And plus you get a ton in the members area. All right. You get the trade desk and the SMS alerts and the chart room and access to the Facebook group. I mean, there's a lot of stuff going on there. So I'll save that. I got to get to work. So guys, hope that was helpful, and see you in the members area. See you for the trading session. And if not, you'll have to wait till next week. All right. See you guys. Thanks. Bye.